Welcome back, everyone. The session now is about hospitality and the tourism sector. Just before we broke, I said it's something on everyone's mind, but things are not plain sailing. I was reading an interview by Yannis Deretsos, who is the president of the Hoteliers Association, and he said, yes, maybe we've recovered some of the proceeds that we lost over the crisis, but the tourism model is changing. Proceeds are not, tourist arrivals are not the metric to focus on. It's all about the experience and the revenue generated. So with this in mind, I'd like to welcome the panel led by Paula Burras of White Deals Real Estate to discuss the matter. Take it away.
Well, thank you, Tassos. Good afternoon, everyone. I'm Paula Burras, partner of White Deals Real Estate, a commercial transaction advisory firm. I'm also a board member of RICS in Greece. Today, I'm very pleased to be hosting this panel live for the first time, although I would prefer without the masks. The hospitality market, as you may understand, is the largest industry in Greece, and many changes have occurred in the past years. In this session, we will provide an overview of the market conditions, the demands, the changes due to COVID, and the expectations for the years to come. We also will touch base on the NPL hotel market, the transactions which occurred over the past couple of years. We've split basically this session into three sections. We're going to cover a little bit with our advisors here, tourism and hotel market. Then we will cover the investor sentiment, the e-auctions and the NPL solutions. And following this, we will cover a little bit the lending possibilities from our banking system. At the end of the session, if time permits, we will allow for some questions from the audience. Today, we have a distinguished panel of speakers with considerable experience in this sector, which are from the consulting, advisory, agency, and banking and NPL management sector. Our four speakers are very distinguished, and I will allow them to introduce themselves to you. We'll start off with Kenny Evangelou, who's the CEO of Xenium Advisors.
Thank you, Paula, for that introduction. Xenium Advisors is a specialist hospitality advisory firm. We provide a range of services to institutional investors, to funds, to banks, to hotel owners. Services such as, for example, underwriting and workout of hotel loan collaterals, business plans and feasibility studies for hotel investments with a focus on turnaround and add value, as well as large-scale resorts with branded residences. And basically, we help local and foreign investors with all aspects of investing on hotels in Greece, right from initial acquisition to right through to exit. Very well.
Our next speaker is Alexandros Kolokithas. He's Director of Corporate and Shipping Recovery at Intrum. Alexandros, can you speak?
Thank you. Thank you, Paula. Good afternoon, everybody. Thanks for the invitation and the opportunity to speak at this conference. I'm currently Director within Corporate and Shipping Recovery at Intrum Hellas. One of the major areas I'm focusing on is hotels. I joined Intrum from Piraeus Bank, where I used to focus at hotel debt restructurings. And prior Piraeus, I used to work for Sumitomo Mitsui Bank in London for 7 years, doing LBOs, asset and project financings within the transport infrastructure industries.
Thank you, Alexandros. Our next speaker will be Mr. Dimitris Kostadopoulos. He's General Manager of the CEO's office at Piraeus Bank. Dimitris, can you tell us a few words?
Yeah, hi. I had worked for a big hotel chain in the past for about 10 years, and when I returned to the banks, initially Eurobank and afterwards Piraeus Bank, that was one of the issues that I had to deal with. I'm currently presiding the bank's credit committees, both for the NPL accounts and the accounts that were giving money. So we see all sorts of things coming in, asking for money, asking for investments, and funding.
Thank you very much.
Thank you.
And our last speaker is Yannis Paraskevopoulos, General Manager of Danos & Associates in alliance with BNP Paribas. Yannis, can you tell us a little bit about yourself?
Hello, Paula. Thank you also for the invitation to speak to this panel for hotel tourism. Our company is a real estate consulting firm. We are working in alliance with Paribas Real Estate in Greece. We provide real estate services having two main sectors. The one is the consulting sector, second is the transaction sector. Regarding hospitality, we do a lot of business advising hotel investors, hotel operators, hotel brands who are already in Greece or want to enter to the Greek market, providing valuations, feasibility studies, viability studies, business plans, and of course introducing to them opportunities in Greece and in the other countries we operate.
Okay, thank you very much. Okay, we're going to start our first section, which is related to the tourism market and the hotel market. We'll start off our discussion with our two advisors, Mr. Kenny Evangelou and Yannis Paraskevopoulos, and ask a few questions related to the market. Kenny, Greece has managed the health crisis quite well. How has tourism performed in 2021 compared to 2019, or 2020, of course? And how is this market likely to perform in 2022 and beyond? Can you give us a little bit of your perspective?
Yes, sure. As you say, Greece handled the pandemic relatively well, and actually this helped tremendously the recovery in tourism this year. In fact, Greece was the best performing European market, even better than some of the more the large sun destinations such as Spain. Of course, it's a very peculiar market with a very unique set of circumstances this year. For example, a number of the southern Mediterranean markets, such as Tunisia, Morocco, Egypt, are effectively closed. So this has helped Greece tremendously. On the other hand, the tourism market only really started in July. So it's a much shorter season than in previous years. And still, let's not forget, we still have some COVID restrictions in place in certain destinations. For example, you still have late night curfews. And also, a lot of European countries have quarantine requirements for non-vaccinated travelers going back to their base country. During the summer, in terms of foreign tourist arrivals, in the months of July and August, we had, I think, about 73% of the levels of 2019. So the market did very well. And if we just focus on August, in some locations this was even higher. For example, in Crete, it was 86% of the level of August of 2019, double the level of 2020. On a 12-month basis, on an overall basis, I think most commentators agree that we'll reach at least 50% of the numbers of 2019. Possibly even higher. This season is very much one of last-minute bookings, and in some of the bigger locations, the season may be extended into October and perhaps early November. So if you look at spending, on the other hand, as Das was mentioned at the beginning, spending is actually higher. It's 20% higher per trip than it was in 2019. I think this makes sense because there's a lot of people didn't go on holiday last year, so they have more money to spend. Right. And generally, we've seen a lot of travelers upgrading the accommodation that they stay in. This has benefited, in particular, five-star hotels. Five-star hotels, upscale hotels, have generally outperformed the market this year. And certain hotels have actually performed better than even in 2019 with higher occupancies and higher ADRs. In terms of source markets, some source markets are down, UK, Russia, some are up, Germany, France, Poland, Holland, for example. Looking forward to 2022, I think that the consensus is that there is a lot of interest, obviously, as countries come out of the pandemic and vaccination rollout increases. Most commentators agree that we'll be to around 80 to 85% level of arrivals compared to 2019. The question mark is spending, if it can continue its high level this year, with a full recovery probably in 2023.
Wow, that's really impressive. So the data says that 85%, we will come back to 85% of 2019 next year.
That's the let's say the current working.
So it seems that by 2023 we will come out of this, hopefully. Yeah.
Exactly.
Well, that was a really nice summary of what's happening right now. Yanis, do you want to add something to this?
Kenny described it very well. The market till now, a question mark is, as Kenny said, is in the spending, because there are some figures that perhaps this higher spending is also coming through the accelerated savings that the foreign tourists have already, and they have spent it more now during the pandemic. They saved money, so they can spend more money now during their vacation period. Okay?
Yes.
But the numbers that Kenny mentioned are exact what we are also working with. We're expecting 80 to 85% revenues and visitors in comparison with 2019, and we're here also from let's say from the Greek hotel number that this year the revenues could actually reach the mark of 12 billion euros. Okay, which is much higher than 50%. Okay,
right.
But it's something that will take place after we can discuss it after October, because October, as we heard, will be a very good month.
Yes.
In October, they have already 1 million airline seats booked for Greece. Okay, so this is something.
Yes, that's very positive, because we do want to extend our tourism season, and I think this year will be a very good year compared to even 2019 for October.
Of course, this is actually only, or not only, but the big part is for the resort hotels. Okay.
Yes.
If we are coming to the city hotels, we are facing a different situation. The numbers are not so optimistic as there are in the resort hotels. There is a big hit during the pandemic that's going on with the MICE, the conferences, meetings, exhibitions, and so on. And this makes many hoteliers to think a little bit out of the box. We hear now new terminology saying about bleisure, saying about digital nomads. For example, bleisure, they can combine, the travelers can combine their business traveling with leisure, staying a little bit longer in the destination they have chosen to work with. Also, we count a lot digital nomads because Greece can attract a lot of digital nomads who can now work not in the city that their company is placed, but they can work outside the city, outside the country. And this could create a demand that was not present in the last years.
Yeah, this is the new trend. That is,
Exactly.
Actually, that's coming to my second question, because we realize that the tourism market is changing. Even before COVID, let's say, it was changing. So we have new trends. And what do you think will be the impact, Kenny, for Greece in the?
Yeah, I think what we're seeing is. As Yannis says, obviously leisure travel will recover a lot more quickly than business travel, and that also is an advantage, let's say, for luxury travel, because it's generally more resilient to market downturns. And if we see, looking forward, the trend is very much the sort of high-end travelers, high-income households. They're the ones who will be increasing their demand for travel spend, particularly Mediterranean destinations, looking for nature, looking for beach resorts, looking for social distancing measures, wellness, gastronomy. That's very much the trend which is driving the market at the moment. The top 10% earners in key source markets like Germany, Russia, UK, their incomes, their household incomes are scheduled, forecast to rise by about 5% per annum for the next 4 or 5 years. So that's going to create a lot of demand for more upscale product. This is one of the trends which has been driving the development of 5-star hotels in Greece over the last few years and will drive in the future. For example, over the last 10 years, there's been a very big increase in the number of 5-star rooms and upscale hotels in Greece. In some locations, such as South Aegean, Ionian Islands, you've had 10% annual compounded growth of 5-star hotel rooms. Crete, 5 to 6%, whereas for 4-star and 3-star, the situation has remained relatively flat. Added to that, you've seen the introduction of, for example, more lifestyle hotels in many parts of Greece, upscale hotels with a focus on experiences, as Tassos said at the beginning, wellness, gastronomy, and I think that's going to drive the market in the next few years. That's also bringing foreign brands into the market. Greece traditionally had a low penetration of foreign hotel brands, upscale brands. And I think now we're seeing this trend accelerating. This also has to do with a lot of hotels changing hands, more professional investors coming into the market, moving slightly further away from the sort of the family run business model, which we'll discuss a bit later on. And so we're seeing more hotels which are branded, usually with a local franchise partner, which is usually the most economic way to do it in Greece. Also, some hotels have soft brands, so they're keeping their name and their identity, but also plugging into the loyalty program, or, for example, Marriott through an autograph collection, through luxury collection, and so on. And finally, not to monopolize the discussion, this is also this general trend of let's say, of high-end spending is increasing the demand for second homes. So you're seeing the development of integrated resorts. Greece was traditionally very behind these trends, but we've seen some very successful examples. Costa Navarino, for example, who sold many homes in the last few years, and they're continuing the development program. So the buyer also has the use and services of the hotel, but the developer can put the residential unit into a rental pool, and so the buyer can have rental income in the months that they're not using the property. So I think now we're seeing a lot more of these resorts will start to come on stream over the next few years, and this is a way to really add value to Greece's hospitality product.
Thank you very much. Yes, definitely the 5-star hotel market has increased in Greece, and the villa concept is very attractive. As you mentioned, Costa Navarino and a number of other projects that have been conducted in Greece, and Peloponnese specifically. Thank you very much. It was very enlightening. Now we're going to move on to the third question, which is about the hotel valuations. Okay, since you are advisors on hotel valuations, can you tell me, because we always have this question, do we review these official statements of the hotels, and how do you take them into account when you're doing a valuation of a hotel? Yannis, can you give me some feedback?
Of course. First of all, as independent valuers, we have to review all the documentation that is in place. Okay. Also, that means we have to also take into consideration the official statements that are coming to us. Okay. But we have also not only to review them, but also to make an opinion about them, to understand if they are right or wrong. We have different benchmarks that we can use. We have different tools, platforms like ASTR or GBR that we can use also. So we have the experience having connections with the major hoteliers and the hotel chamber organizations. So yes, we have to take them in consideration, but not only them. And if we see that there is a discrepancy between the numbers that the hotelier is providing and the real numbers, then we have to go to the evaluation with the numbers that we think are most appropriate. Okay.
Yes, I agree, because many times we see these statements, they're more
there are both sides, if I may say.
Yeah.
Sometimes we have official statements that are totally wrong on the low side. Sometimes we have business plans expectations from operators that are totally wrong on the high side. Okay, they are both kind of wrong approach. Okay, that's why. As set as independent values, you have to come and bring your own opinion in place. And
you're talking about the pro forma statements. I'm talking about the official statements
Financial
that they
statements,
state.
yeah.
So there, I think they're probably lower than what reality is.
Financial statements are prepared for tax purposes. They're not
Yeah.
management accounts.
Course.
So it's
So I would suggest that anyone wanting to invest in a hotel would do their numbers well.
of course, also,
do their
if you
due
have international brands and international investors coming to the market, okay, they bring their own business plans, they do their own work, and they're giving to the value of their own work. Of course, this work is also anticipated to be under review from us, but they are more sophisticated, and it's more easier for us to do our job because they know what they're doing, and if they want to invest in the market, probably the numbers that are providing are the correct ones.
Okay, very well. Thank you very much. So we'll move on to section 2, which is the investor sentiment, e-auctions, and the NPL solutions that are in place right now. And we'll start off here with Mr. Dimitris Kostadopoulos to have the discussion on this. Do you believe, Dimitris, that there's a strong distressed market in Greece for hotels right now? What do you see from your experience?
Okay, there are many distressed hotels, but the market is not distressed. I mean, big tickets have already changed owners in the past. What we expect to see right now is, we expect to see, but we are not sure whether it's going to go or not. We're talking about the winter destinations. There were immense subsidies in the past, during the last 15 years ago, for example. And someone could build a hotel having 60% subsidies. So we're talking about Kastoria, we're talking about Arachova, we're talking about places that will still remain in the red, meaning NPLs. Now, as about the other hotels, I mean, summer resorts, there are no big tickets anymore like they used to be. We're talking about smaller hotels in terms of rooms, and not that good as the ones that have already changed hands. There are hotels that remain to be sold, but it's of second rank, say second-tier hotels, not the good ones.
So that brings me to my second question, which is, Yannis, the current status of the NPL sales through the auctions, do you think it's sufficient to attract investors' interest?
It's difficult. It's a difficult approach. E-auction is a useful tool, first of all, to be honest. Okay, it's helping everyone to be transparent, and it gives also the opportunity to the investor to bid again and again if he wants to have the asset and acquire the asset. From the other side, there are difficulties. You cannot inspect the building, the asset. You cannot have a proper due diligence. So you don't know what you're buying. From another pro, of course, is that you buy a clean asset. There are no other liabilities. You are paying only the amount, okay, that you have to pay. Of course, if there are provisions for, let's say, legalization issues. Because this is something also that we don't know. And if you don't inspect the hotel and make a proper due diligence, you cannot understand if it needs legalization. Okay. International investors are struggling with e-auctions, to be honest to you, not only because of the procedure itself, but also because of the quality of the assets. Normally in the e-auctions, the hotels that are for sale are not the best ones. Okay? They are secondary assets, small assets, not the kind of product that an international investor would really want to buy. So I think this will improve with the new law that is now coming in force, okay, especially about the pricing. Okay, so let's see.
Okay, yeah. Okay, so I understand that the supply for first-tier properties is less and less now, and a lot of those deals that happened, from what I understand, happened without
the
going to
past.
e-auctions. There was concessions, so it was like a triparty.
Also special liquidation processes.
Special.
Or special limitations, yeah.
Large assets are going to
So
the
the big
market
ones-
through special liquidation processes.
So for the big hotels, basically, there wasn't an issue about not understanding, the product, because I guess it was an open kind of tender. So it was like a tri-party, let's say, agreement between the bank, the borrower, and the investor.
Special liquidation or special administration, we had CAPSIS
Right.
yeah.
some months ago. It was sold out in a process, and there was a very good price paid by the investor.
Yeah.
There was another one back in 2017 in Kos. The property was like Itira, it's public information. However, we
It
had...
was a big one. That one was like 600 rooms or something.
Yes.
It was three
Then we
buildings.
had, through an auction, not
Yeah.
special administration, Lidra Marriott, if you remember, bought, it's currently Grand Hyatt, bought by Heinz.
Mm-hmm.
And then we had Blackstone acquire Louis,
Yes.
not through special administration, with
Direct
basis,
negotiation.
direct sale. We had Oak Tree back in the past getting into Sunny and the Andreadis property. We had Heinz getting into the Kefalogiannis properties in Crete, into the Mamidakis properties in Crete. So there is demand. There is demand. The question is what type, what form does it take? Usually in auctions you're not getting what you're looking for through, say, a consensual agreement.
Any product that is coming in the market that is, let's say, primary product, it has a good end. Okay?
Yeah, for sure.
The price is good, and also the investors are there to bid for it. Normally, because there are big projects, all of these projects are going through some tender processes. It's not direct negotiations. Okay, it could be a beauty contest, or it could be a more official process. But there is demand for good hotels. There is demand in the market.
So about the pricing, what can you tell us about the pricing? I mean, how do they base their
Pricing.
Because, for example, you mentioned one of these transactions, and it was an open bid, I think, and one individual was higher by 50% versus the second. So, it was kind of awkward to see that.
Again,
one
in Greece,
investor
we don't
valued.
see, in Greece, we haven't seen low prices in the primary assets. When a primary asset, a hotel in a good location was for sale, the price usually is and was high.
At the top end of the market.
At the high end of the high level of the markets, okay. That's why I mentioned to you before about the e-auctions. In the auctions, sometimes also there the price is high, although there is a secondary asset. So we must find ways to lower easier the prices. That's why I mentioned also the law now that is giving the opportunity after the first e-auction, if it is deserted, to go directly to a price decrease without a court decision. So this is could be easier, but as Dimitris said before, Greece was never a distressed market. Okay, we have distressed sellers, but they never distressed market.
Yes. Mm-hmm.
We had distressed hotels, but not
Distressed hotels,
tourist market.
Distressed market, yeah.
That's true. So, I mean, we all understand that there is significant interest in Greece because, of our tourism market, not only, but what type of returns are these investors looking for? Can you give us a little bit more detail on that?
Okay, I think for a good hotel, something between 6 and 7% would be okay.
Okay.
On equity, 6 to 7%.
6, 7% on gross.
Yeah.
On gross, yeah.
Gross yield.
Gross yield. Yeah.
Gross yield.
Yeah.
And then-
There are some obviously more opportunity
taxes,
investors who want to.
Gross, yeah, that's why I mean the gross.
So some investors, who want have a more add value or opportunistic model. So, they want to get in, turn around the hotel, add value, and get out in maybe 3 years' time. They'll be looking for IRRs, 15, 16, maybe even 20%.
Leverage.
Okay, this is something else. I agree with Kenny.
Yeah.
And this is something also that creditor will do and are doing now with the auctions. Okay, they are possessing the hotel, giving to an expert the operation and the management in order to make the operation better, make more profit from the operation, and then after 2-3 years, fall in the maturity of the project to sell it in a much better price achieving the IRRs that Kenny and the process that Kenny said.
So the banks, they make the investment, the capex, and then the management?
Not the banks, actually the creditors.
The buyers of the loans,
the
usually
buyers, okay.
the global wealth funds. Who
They already have the investment stuck. They're waiting for someone
To buy it.
to buy it.
Yes, that's true.
I think it's fair to
And
say,
believe me, IRR is negative most of the time
Yeah.
when we
Right.
talk about NPL.
but on the special administration front, I think it's fair to say that this is an expensive business because one needs to provide interim financing. On the other hand, the big advantage is that you can impose a very transparent process and attract international investor interest, and that's why all the special administrations the processes that opened up over the past few years were so successful in the end.
That's true.
But you really need to know what you're doing.
Yeah, well, I assume now with all these deals happening that transparency in the market, Dimitris, is much better, right, for you as the bank, and the data that you're receiving now from all these new entries, the transparency.
Yeah, we expect to see more transparency coming up. Yeah, because most of the hotels changing hands are owned by funds, which means that they have managers there doing the job for them, so they need to see what's going on in terms of financial statements, real figures, in order to move on. So as the market changes, we see more transparency coming up.
Okay, very
But
good.
on e-auctions, I just want to add that, I mean, I can recall a time when there were only 5 of them a few years ago. Now there are 50. And and following the series of suspension of auctions, it's gathering pace. Who knows? Maybe next year is 200. So this is certainly a pool of an increasing pool of transactions going forward. And yes, you won't see the crown jewels, but for a certain price, there are opportunities, and especially for the local players. Who know the assets, then the problem that you have with non-transparency because you don't get into the asset is sort of the asymmetry is sort of solved. So one pool of investors for the auctions going forward is local players.
Yes, for sure.
And also real estate companies of the services. For example, our Ryoko has been very active over the past few months, and this is something which is gathering pace as well. And as Yannis said, investors would be most probably going forward be willing to acquire straight from the auction, team up with an operator, team up with advisors, working on the assets, and as the cycle is picking up, disposing of the assets a few years down the line.
Right.
So I think e-auction is certainly going to be an area of significant interest going forward.
Okay, very good.
Somehow it has not transpired yet, but it will.
No, I agree totally with Alexandros regarding local players. We have to do examples of hotels that are not in the major tourism destinations, let's say, that now are discussing from local guys to be acquired through e-auction process or through consensus sale through the e-auction process with the borrower, because sometimes you have to go through the e-auctions to the other liabilities that that the asset has. So their consensus, they go to the e-auction and buy the asset to the e-auction to smaller Greek cities that that the price is well. This is very important. That the price is correct. We have to the price. Sometimes the pricing is wrong, not the asset.
Yes, that's true. Okay, very well. So let's move into like what kind of NPL solutions, for example, Intrum provides for its clients. I'd like to discuss now, with Alexandros. It has been several months, since we had this new bankruptcy code put into effect. What are the options available in terms of consensual, non-consensual for your borrowers, and how does it compare against the previous frameworks that were in place in Greece in terms of timeline, simplicity, and effectiveness? What are the major changes? Have you seen this actually take effect now, this new law?
Yes, it's been put into effect from 1st of March. for certain parts of it, and from 1st of June for other parts of it. To start with, there are plenty of options. There are options on the consensual side of things. There are also less amicable options. On the consensual side, we have, first of all, the introduction of the out-of-court workout. This is an automated, digitalized process, which in my view has already served its purpose, because my colleagues tell me that there's already 25,000 cases in the system. So perhaps some amendments may have to be made, but in my view, it's already served its purpose. Then you have the typical pre-pack rehabilitation, what we call here 106B, which is a plain reorganization of liabilities of the existing company, or 106BD, which also entails transfer of business. From a commercial perspective, not much has really changed. But anyhow, this was and remains a very successful law. For example, in our large hotels team, over the period 2017-19, before the COVID crisis, we did approximately 200 million in debt restructurings using this law. It's very successful. The courts are very familiar with it, and it's very hard not to get it through. Now, on the more aggressive options, you have the replacement of the special administration from what we now call sale through bankruptcy, which in my view has improved from a commercial perspective for once, because there is a clear definition now on what cease of payments mean, which was always hard to get through the court. And secondly, because it enhances the powers it introduces the assembly of creditors and enhances its powers. For example, creditors can now ask for revised biddings. And you also have the piecemeal liquidation, or the auction, for which I talked a bit earlier. So there are options. There are quite a few options, both on the amicable and on the less amicable side. And there is an ongoing effort by consecutive governments to get it simpler, to get it quicker and more effective. And I think this will continue.
That's very good. Okay, so can you tell us a little bit of what the state has provided over the past couple of years due to COVID? What kind of grants or funds was given to the hoteliers, and not only, of course, but today we talk about them specifically. Where was it directed, and do you think there's going to be any further programs, or this is it, because the Greek government gave a lot of money, and
it is the case that
it's going to continue?
It is the case that the state is gradually withdrawing. Yet we do have some programs running as we speak today. One is from stems out of the European Structural Investment Funds, what we call ESPA, which is basically 2% of 2019 turnover, capped to 400,000 euros. It is a working capital line. And there's also Gefyra 2. Basically, Gefyra 2 is mainly addressed to support indirectly creditors and companies, obviously, servicing their debts. Generally speaking, the amount of money given directly or indirectly was very significant. I think it amounts to approximately 40 billion. And obviously, I mean, hotels being a very important sector of the economy, got their fair share, if not their lion's share. In many ways, through recoverable prepayments, refundable advancements, you name it, through various programs to support employment, and through interest expense subsidies, and not to forget Hellenic Development Bank's programs, what we call TEPIH and NEAT. Whereby the state guaranteed, whereby the Hellenic Development Bank guaranteed a significant part of the loans extended to companies. And I would also like to highlight our partnership with Piraeus Bank, through which we did manage to extend loans to forborne exposures, yet to viable businesses, over and during the crisis, and directed liquidity to hotels and through hotels to the local economies. So yes, it has been very significant help given. It is gradually being reduced, and now they would have to
pay it back. Some of it.
Not necessarily,
no?
from what we hear.
Some of it has been
Some of it.
free, granted.
Some of it.
Yes, okay. Okay, so we'll see now basically if there's going to be any new NPL transactions come to the market because of COVID. Do you believe that there will be anything new happening due to COVID, or do you think that we're pretty much safe now because of these state-supported funding?
I think that going forward, the NPL market is going to become more active.
Mm-hmm.
We'll see more transactions.
For hotels, you mean?
And for
Yes.
hotels,
Okay.
being a prime asset class
Mm-hmm.
within non-performing exposures. In the past, banks we used to focus on the NPE management side of things and on curing non-performing exposure. But as those legal claims have been effectively transferred through the Hellenic Asset Protection Scheme to investors, those investors through their services, the likes of Intrum, etc., are incentivized and might decide to prioritize going forward to bring recoveries forward in order to meet the business plans that they submitted to Hercules. So I think that over the next few quarters, we'll see some increased activity in terms of either portfolio of loans to be disposed of, to be sold, or even single names. To be sold as standalones. And at the same time, I also think that the banks, as they are emerging out of this decade-long process of repairing the balance sheets, and provided that they would be willing to extend more loans, and I guess this is they will become a natural buyer of these loans. So yes, I think that over the next 12 to 24 months, we will see a more active.
Medium-sized, let's say, hotels, or like
I think it could comprise anything.
Or lower tickets?
I think both.
Both. Okay, that's interesting. All right, very well. So I think we have like 10 minutes left. So
5 minutes.
we're actually going to the third section, which is about lending. And Dimitris is going to speak to us here since he is the representative of the banking system. We'd like to know, how do banks evaluate the funding of hotel projects, and whether they pertain to greenfield transactions or to acquisitions of existing units? Can you give us a little bit of feedback on what you've been doing? And second of all, also, I assume that you expect to see more transactions, and you have good demand right now for lending. Mm-hmm. Give us, let's say, your perspective on what's happening for existing hotels. Let's say Greek borrowers, are you giving them more money even though they have debt? And new players, what's the difference?
There are some basic rules when you lend money to hotels. Banks in the past used to lend money to hotels as if it was commercial real estate. Mm-hmm. During the crisis, everybody was seeing things like NPL ratio in hotels 49%, 51%. So everybody was going crazy because that was the same for the automotive industry. The banks are not giving money to hotels as if they are commercial real estate anymore, because this created the big dramas and the big NPL flow. Banks, no matter what the valuation is, base their lending, the lending structure and the amount of lending to a business plan, to a viable business plan. So no matter what the valuation is, because the value of a hotel is brick and mortars. Brick and mortars do not pay the money lent by banks. So what we're always looking at is location, where is it located? If we have benchmarks around the place, for example, what's the benchmark for cost, for roads, for Crete, whatsoever, and we give money up to 70% of the investment. So if the investment is 100, we usually give 70, but what we look at, which was not looked at back in the past, is what we say loan over EBITDA. We don't give money which is more than 6 times EBITDA. So if you bring us Taj Mahal and you say this is 1 billion, the question becomes, fine, what's the EBITDA of Taj Mahal? 0, no money, sorry. Because at the end of the day, what we're looking is get the money back. Okay? Not invest in projects that valuation are going up, because we don't expect to get paid by auctions or foreclosures or things that are do not make people happy.
I see. So you look at LTVs, debt service coverage ratios. Obviously,
yes.
It's a business has a going concern. So what about these existing borrowers that, okay, they owe a lot of money, but they need to reinvest in their properties to improve the day-to-day business? What do you do there? Do they get any money, or do they
Yes,
stop?
they do. They do. It's an issue of a very concise and very concise business plan, a real business plan, to show that the bank gives money, whether it's renovation, whether it's working capital, whatsoever, but the banks expect to get the money back in order to be able to give money back again, to lend money.
Yes, okay, very good.
Okay?
Okay, you want to add something, Yanis? Yeah.
Adding to what Dimitri said, also from the valuation point of view, if you see valuations for hotels before 2012, there were all of them, actually the vast majority of them have been done through the DRC, depreciated replacement cost, which is totally wrong. After the crisis, and we and other values, we are not doing any valuation without DCF models. We use only discount cash flow method in order to support the operational part of the hotel and create the result that also the banks are evaluating in order to give the loan.
I assume this was a peculiarity of the Greek market, because in other markets they were still doing DCFs back in 2011, I assume, right?
I don't think so. I believe that banks abroad are looking at the cash flow before they give money. They're not looking at the valuation. For example, when Yanni comes with a valuation, he says, you know, this hotel is X, which is about 12 times EBITDA. Great, 12 times EBITDA. Okay, how much does the bank is willing to give? 6 times EBITDA. The balance go to the shareholder, the owner. Okay, we will give as much money as we are sure that we will get it back, one way or another.
Okay, very good. So I think we pretty much covered everything, and because we don't have a lot of time, I know, Dimitris, that basically the banks assisted also the borrowers during COVID.
Yep.
Just briefly tell us, what did you do in order to assist them?
Borrowers during COVID got government subsidy, which was either 25% of the revenue they made in 2019, or 2 times the wage and salary expense during 2019. That was an endowment by the government. At the same time, banks did not ask for interest or capital repayment for about 1.5 years. So we gave them a bank holiday, let me put it this way, a payment holiday. So the assistance was twofold: government subsidy and the banks not asking for money during the COVID.
So they're starting to pay back now? Okay, that's good. Very good. Okay.
That's why you didn't have any hotelier sobbing, or, you know, because usually they say, you know, you're not helping us, you're killing us, stuff like that.
They were happy this time.
Everybody was happy.
That's good.
When you give money, everybody's happy. When you try to take it back, everybody is not happy.
Okay, very good. Thank you very much for this. Here are like your closing remarks and outlook about the market in general. And, you know, I'll just give 2 minutes to each person just to respond to the same question. Given the amount of demand and supply conditions in Greece, where will the future pipeline of deals come from, and where are the opportunities, either for core plus assets or value-added investors? Do you want to speak, Kenny? I think you mentioned most of it, but...
Yeah, obviously one of the biggest sources will be through the, you know, the whole NPL process, as this process matures, materializes, legal proceedings, etc. So there'll be a number of assets coming out of that process in some form or another. Also, there's a lot of companies, let's say, who aren't they don't have a problem with their loans, but they might not be hotel companies, they might have other businesses. And so, they think that this is the time perhaps to sell.
I see.
And also, you have family businesses, maybe going to the second generation or third generation who doesn't want to be involved anymore in the hotel business. So they'll be looking to sell or sell the majority of their business. And we're seeing a number of these transactions currently. And just finally, I think going forward, we'll have a sort of a two-tier market. So there'll be a lot of interest in the top end of the market, the high-level collaterals. The real challenge is what to do with the secondary quality hotels, and the smaller ones. Is it change of use, or finding something else to do with a hotel? That's the big challenge for me going forward.
I see. Okay, Alexandros, what do you think is going to happen here?
First of all, I'd like to say it's been a difficult 18-month period.
Yes, because of COVID, eh?
Yep. Above all, it's been very difficult, I think, for hotel owners who managed it through the crisis, so kudos to hotel owners. I think we're now past the trough of the cycle. I think we're now seeing the grassroots of recovery. I think everybody stands there to gain out of this recovery. And as I said, in my view, most transactions would come out from a vibrant secondary loan sale market.
Very good. Dimitris?
I believe that the market, the outlook is looking much, much better than what it used to be due to COVID. I believe that next year, chances are that we might start get the revenue of 2019. Some people claim it's going to be 2023. I believe it's going to be next year.
Very good. And
Okay.
Yannis, your thoughts?
We have also an optimistic view about the market in the near future. The brand Greece remains strong. Okay. The state supported a lot the hoteliers, so the banks, the state, everyone supported them, so they don't have any excuse now, to be honest with you, okay, how they could operate further. Of course, there will be a challenging year because we want to see the hotel operation coming without any aid for the moment that they have till now. Okay, that's why for me there will be a hotel market vivid in next year, because some of the hoteliers will not survive, okay, without the aid that they're becoming till now. So investors are there for different kind of assets. There are investors for big, let's say, global funds that can invest in large-scale projects or portfolios. There are smaller investors that can invest in more local assets. So we think that we'll see a lot of transactions during the next 2 years in Greece.
Okay, very well. So I guess we closed up our discussion here. And I don't know if anyone wants to make a question to our panelists here regarding what we discussed, or should we close the session? Any questions? No,
We covered everything.
I guess we solved all the
We're very
queries.
thorough in what we're
That's
saying.
good. Well, thank you very much then. I believe we touched upon the tourism market a little bit for those that are not aware of what's happening here. And you've enjoyed our discussion. We thank you very much for your participation, and we wish you a great afternoon. Thank you very much.
Thank you.
Okay, bye-bye.